For the first time in recorded history, every major economic power, America, China, Europe, Japan, they're all hitting the absolute peak of the debt supercycle at the exact same moment. A reset is coming. Treasury Secretary Scott Bessant told us it was coming before the election. And when it hits, it won't be regional. It will be global, systemic, and sudden. Think about it. In just the past 2 weeks, JPMorgan, BlackRock, Vanguard, Charles Schwab, they've all changed their stance on Bitcoin. They know what's coming. They're building and they're preparing. So what is happening? And what system is quietly being built right now to replace the one that's dying? Well, strap in because we are in a geopolitical economic war and Bitcoin is right in the middle of all of it. We have a massive show today.
Every debt system ends in one of three ways. They inflate the money so they can pay off the debt, and that's just an absolute wipeout. Weimar Republic did it, France did it, Rome did it, just a wipeout. Then there's a hard default and political upheaval. Russia did that in 1917. Argentina did it over and over again. War leading to a new monetary order. That's another one. The Napoleonic Wars, the British gold standard, World War II, Bretton Woods, all of that. But there is always a reset, always a new order that is born from the ashes of the old. And here's what makes this moment unprecedented. Rome collapsed by itself. France collapsed alone. Weimar collapsed by itself. Britain declined while America rose. It was always one country coming down and another country coming up. This time, all countries on both sides, the free world and the not so free world, there's no one rising. China is drowning in its local government debt. It's never going to say this, but it's a paper tiger. Europe is fractured and coming apart at the seams. Japan, demographic time bomb. America is politically frozen and insolvent fiscally. So for the very first time in world history, every major civilization has reached its peak of the debt cycle. This time, all at the same moment. No one's coming up. So what does that mean? Well, for the very first time in human history, it means when it arrives, it's not going to be regional. It will be global. It's not going to be slow. It'll be systemic. It'll be everywhere. Now, the hope the history books don't tell, and nobody in the media will tell you this, is with every one of those resets, every collapse, every crisis, it created the conditions for renewal. Rome, its fall, opened the door for a new Christian civilization. France, the revolution there, birthed the modern nation state. Britain's decline cleared the space for America's rise. The devastation of World War II led to the great expansion of prosperity, the greatest that the world has ever seen. So the next chapter is not written. What happens to us is not written. And whether we rise or fall from what's coming depends not on Washington, not on Wall Street, but on us in our homes and our families and our churches and our communities. The debt cycle is not prophecy. It is a warning. You cannot borrow your way out of moral, fiscal, or spiritual bankruptcy. Now, I don't feel like I chose this path. I mean, this with Bretton Woods and then 1972 coming off the gold standard and what they did in 2008 to bail out all the banks, I didn't have anything to say. Did you have anything to say about that? Because I didn't. I wouldn't have chosen those things. But the world is putting something together. And I want to show you what our choices are, because right now people say, I don't like what Donald Trump is doing, or I don't like the World Economic Forum, or I don't like what China. Okay, great. But I want you to know it's going to be one of these systems because it's being built. It always happens. When one is coming down, some new system, usually a country, but not a country this time, a new system begins to rise. And it happens before the fall.
What system is quietly being built right now to replace the one that's dying? Well, let's dive into it and the massive signals being sent by the President and Treasury Secretary Scott Bessant. First, let's start with this banger from Luke Groman. Apparently, some bond market participants do not realize their holdings must lose on a real basis for the US not to lose to China in the great power competition. Let me translate that. The US is going to sacrifice the bond market before it sacrifices global dominance. And guess what? Some bond traders are finally starting to get the memo. Oh, so now you're worried, now that the macro regime is flipping. Well, buckle up, because the biggest signal came right after this headline. Just in, the U.S. Treasury executed the largest debt buyback in American history. $12.5 billion of its own debt. Not to retire debt, not to stimulate, no, to keep the system alive. Because older bonds lose liquidity, they drift off the benchmark curve, and then repo markets, the plumbing of global finance, start twitching. So Treasury stepped in to clean it up. That is not QE, but it is QE adjacent behavior. It's liquidity engineering. The Fed already cut twice. QT formally ended December 1st. Once the Fed stops draining the system, the Treasury's job becomes keep the machine from seizing up. Why? Because SOFR, the repo engine, is blowing up in volume. That means the entire financial system is leaning on overnight repo collateral like a crutch. If even one corner starts trading weird, it cascades. And that brings us to the next warning. Financial analyst Bill Holter, Mr. Gold himself, went on the record. There is more risk in the financial system now than any time ever. And he's not wrong. Look at silver. In 48 hours, silver spiked $5 an ounce, a coordinated scramble for industrial metal that should never move like that unless something is snapping. Lease rates exploding, borrow rates exploding, a global multi-year deficit. And the rumor, someone placed a $20 billion order, equivalent to 400 million ounces. That order cannot be met. Holter says if someone stands for delivery and it looks difficult, everyone will stand for delivery. Contracts become worthless. If COMEX fails to deliver silver, gold goes next, then the CME, then treasuries, then derivatives. The entire collateral chain melts down. And who agrees with Holter? Ray Dalio and Jeff Gundlach buying physical gold for the first time in their careers. When the bond kings start leaving the bond market, you know the end game is approaching. Now let's talk about the most important story no one is covering. Breaking. Trump is considering making Treasury Secretary Scott Bessant not just Treasury Secretary, but also the top economic advisor if Kevin Hassett becomes Fed chair. This is a regime rewrite. Why? Because this creates the Treasury and Fed working together. Liquidity first policy, growth first ideology, financial repression, implicit QE, soft caps on yields, coordinated industrial policy, and geopolitical strategy versus China. This is the 1940s playbook, updated for a digital multipolar world. The markets will pretend to be confused. Then they'll realize this is wildly bullish for risk assets and nuclear level bullish for Bitcoin. Because this structure is a world where holding cash is slow death and owning assets is survival. And Scott Bessant told us his ambitions months before the election.
I think as an economic historian and someone who's been in markets for 40 years, I actually think I'm starting to look like it now. I think we're also at a unique moment geopolitically, and I could see in the next few years that we are going to have some kind of a grand global economic reordering. There's something on the equivalent of a new Bretton Woods, or if you want to go back, like something back to the steel agreements or the Treaty of Versailles. There's a very good chance that we are going to have to have that over the next 4 years, and I'd like to be a part of it. I've studied this. I think it's kind of a unique skill set.
In the next few years, we are going to have a grand economic reordering, something equivalent to a new Bretton Woods. Ladies and gentlemen, this is that moment. And what Bessant did next kind of confirms it. Attacking the old guard.
The question is, is this like a new, is this a new normal?
Andrew, there's no new normal. And, I can tell you that I actually don't read the New York Times anymore. But sometimes I do watch CNBC. But occasionally people send me articles, and there's just this fever swamp. And you're now a pop historian with 1929, and in 20, 30, 40, 50 years, the New York Times is no longer the paper of record. You can't go. I read this article. President Trump is slowing down. President Trump's mental capacity. It is 100% fake. That he only called me twice at 2 a.m. last week, instead of 3 times.
You're saying he called you? I believe that he called you at 2 or 3 in the morning.
That whole narrative. You had what was one of the greatest scandals of all time. That the coverage of the Biden administration, Joe Biden's diminished capacity, and the cover-up.
And that's why it's probably fair to raise these questions.
Where was the New York Times? We just had a 3-hour cabinet meeting yesterday, Andrew. For 10 months, the Biden administration did not have a cabinet meeting. How are you going to invoke the 25th Amendment if the cabinet secretaries never see the president, which they didn't? That I hear from people in the Treasury building that I see President Trump more in a day than my predecessor saw Joe Biden in half a year.
Scotty B walked onto the New York Times stage and turned it into a roast battle.
Worse, in a blue state, affordability is worse than a blue state.
We can debate that, but keep going.
No, there's no debate. The number 50 basis points higher inflation, the 10 highest, inflation rates, they are in blue cities, but
Just so you know, because I went to look at this, this is the Joint Economic Committee, since 2021. The highest inflation of the past 4 years has been in red states, especially Florida.
I'm talking about current.
Current. Not over the past 4 years.
Right. Today.
Okay. I would think 4 years would be a reasonable trend line to look at.
Today it is 50 basis points higher. So anyway, and look, the people are voting with their feet. I have the American people on my side. That New York, Illinois, California, Massachusetts are depopulating.
And they're going to places in Florida, like Florida, where interest rates are I'm saying inflation's up 22% over the last 4 years.
Well, inflation is up 25% nationally, so it's lower.
I believe in New York it was 19%.
Sorry?
I believe in New York it was 19%.
I don't think that's right.
We can go through the math.
This man is a weapon, a true economic hitman, the most important economic mind in Washington right now. And he's building something, which brings us to SEC Chair Paul Atkins, who just said the quiet part out loud.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in the, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront.
2 years? The modernization of markets is now mandatory for the survival of U.S. financial supremacy. And who else confirmed it? BlackRock, Coinbase, major US banks all running live tokenization pilots. It's all stupid. JPMorgan's JPM coin is already operational, but let's be clear. Jamie Dimon coin is not victory for decentralization or freedom. It's a way for banks to protect their crown jewel, fractional reserve banking. Jamie Dimon coin is designed to avoid being classified as a stablecoin under the Genius Act, because stablecoins must be fully reserved in treasuries. JPMorgan wants to keep rehypothecation alive. They want the fiat system on chain. Bitcoiners want the fiat system gone. This is the battleground. Two systems emerging. Systems of control. CBDCs, deposit tokens, centralized rails, and then systems of freedom, Bitcoin, sound money, self-custody. And speaking of banks, this is insane. In just 2 weeks, JPMorgan, BlackRock, Vanguard, Charles Schwab, they all reversed their stance on Bitcoin. Why the sudden change of heart? Well, because they needed the price lower. They ran the same play they ran in 2017. Dimon calls Bitcoin a fraud, retail panic sells, JPMorgan buys the dip. This time, they attacked MicroStrategy, jacked margin from 50 to 95%, froze transfers, pushed index exclusions, waited for a 35% drawdown, then announced a Bitcoin-backed bond. This wasn't an accident. This was accumulation. And now Larry Fink, Mr. 13.5 trillion, is explaining Bitcoin as a macro hedge to all his Wall Street buddies. He said sovereign wealth funds are buying Bitcoin. Again.
We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. Right. That's fine. And they're establishing a longer position. And you own it over years. This is not a trade. You own it for a purpose.
This is a global adoption wave. And Michael Saylor confirmed banks are adopting Bitcoin faster than expected. Needless to say, 2026 is going to be absolutely insane. Roll it.
Banks in the world to embrace crypto, to embrace Bitcoin in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JPMorgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months, right? We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank. And now, if I counted the top 10 banks in the United States, 8 of them are actually engaged in crypto lending. And they've all flipped their stance in the last 6 months.
CBDCs, deposit tokens, bank-issued coins, rehypothecation, surveillance rails, and then System 2, freedom money, Bitcoin, gold, self-custody, open networks. Gold is sound money with one fatal flaw. You can't send it across the world in minutes for pennies. Peter Schiff, the gold pope himself, just admitted live that he couldn't verify his own gold in front of CZ. We're about to bring it home today, but before we do, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan.
So
Oh,
I have a nice box here.
What is that?
It has some, I think it's Kyrgyz language. I took it back from Kyrgyzstan. It has a certificate. I got this from a very important person from Kyrgyzstan. Very recently, just completely by luck. So we take it out. It's pretty heavy. I'll put this down. You can see, like it says, Kyrgyzstan, 1,000 grams, fine gold, 99.9.9, and a serial number. Try it.
Yes. Yeah, it's heavy.
Is it real gold or no?
Well, I don't know. I mean, is this what you're trying to? I mean,
This is the fourth turning. You want money that backs itself. You want Bitcoin. And BlackRock's Robbie Mitchnick just spelled it out. The only two assets globally adopted as monetary alternatives over thousands of years are gold and Bitcoin.
There's only two assets that have emerged, maybe three if we count silver, in the last multiple thousands of years that became globally adopted as a monetary alternative. Gold, you could say silver at some point, less so today, and Bitcoin. So that's an incredible achievement for Bitcoin. Obviously, Bitcoin is newer than gold. It's more volatile than gold. It's risky as a kind of novel technology instrument, but it also has a lot in its favor as something that is digitally native in an increasingly digital world that is efficient to store and can be moved anywhere in the world in near real time and near zero cost. So Bitcoin has registered in the arena as a real competitor, real option in that space of things, of a small space of things that you can use to kind of play this debasement trade. And we've seen that resonate.
All right, so let's run it down. Debt supercycle, treasury buybacks, record treasury buybacks, end of QT, repo stress, derivative cracks, silver delivery crisis, Fed treasury consolidation, pre-1913 policies. We've been talking about this. BlackRock's tokenization regime, banks capitulating, sovereign wealth funds buying, Bessant building a new Bretton Woods, and Bitcoin positioned as the backbone of the new system. This is not random. This is not chaos. I don't know, I think it's still chaos. But this is the transition of monetary eras happening in real time. One system is dying, one is being built, and you get to choose which one you participate in. Bitcoin or digital serfdom. Freedom money or Jamie Dimon and Ursula coins. Self-sovereignty or the beast system. Choose wisely, because the reset has already begun, and Bitcoin is not outside the system anymore. Bitcoin is the replacement. Let us know what you think below, and don't forget to like, subscribe, and give us a pamp. Share the Sound Money Gospel and set those notifications. Get the best in Bitcoin news delivered to you daily. Stay up to date with the peaceful revolution. Follow us on X, and I'll catch you all next time. Love you guys. Peace.
If you prefer to go down with the ship, you.